recording. Today is Father's Day in the US. The 16th of June. We have, I forgot how many, 90 tickers to go through. So let's get started. First, I usually have, by the way, I don't know when you're watching this. We record it on Sunday morning, most every Sunday. Sometimes we take days off. But I also have a video tonight after the futures open. I may start doing them Monday morning, but at least today I will do it today. Maybe I'll start Mondays next couple of weeks. The point is to get us ready for next week. And I'm going to start there with a blurb about it. I don't know what I'm going to say, but it's going to be along the lines of this. Let's watch. So this is the QQQ. The story is totally different in the market right now. Before you say the market, make sure you know what you're talking about. Look how healthy this market is. Okay, that's tech. This is, 2000, like .com stuff. Actually, it clobbers the .com probably. Anyway, let's downgrade to the regular SPY, SPY. Still strong. Every consolidation zone results in a new high. Every headline results in a new high. Does it? Here's one that's the S&P that is equal weight. Not the same story, right? What does that mean? Instead of having Apple count 7% or 8%, Microsoft count 6 or 7%, NVIDIA, Apple, and Microsoft are about 19% of the S&P. This reduces that effect. Not the same picture. There's no higher high. In fact, the high was set in April, on April 1st in the RSP. Okay, you don't short the market in general because of this, but this is to wake us up to make sure that we know what we're following. If we're following just 3 stocks, that's fine. If you're invested in, quote, the market, because the market is breaking highs, the market has not broken a high since April. Okay, let's go to the Dow. Also not the same story. Let's go to 2,000 stocks. I call this the broader market. I don't know what they mean when they say the broader market. This is 2,000 stocks that are billions each market cap. So Russell 2000, it is below 200. Remember, 203, 205, 210, 211, 212. Those are the zones that it cannot break through. We're back below that. They say that this can go on for a long time, maybe. It still makes me say it louder that up at these levels while this bifurcation continues, I'm more of a trader than an investor. So if I have $1 million that just lands in my lap, I'm not going to put it in stocks. I'm going to be trading in and out of stocks and starting positions in some stocks that have fallen into big time support, but leaving room for error. No way am I involved fully at these levels. Starting. Okay. That out of the way, let's get through the tickers that we want. Oh, by the way, and fear, the VIX is near lows, which doesn't make sense. All right. This company I've heard of, they do something to do with phones. Meh. All right. Apple is back to its old glory. It finally made a new all-time high, so I need to load up. No. I think that headline on Apple was horsepucky. That headline is from last year. To me, here's how I see the headline on Apple. Let's talk fundamentals first. We'll talk charts. Charts, it's at all-time highs. That's not for me. Maybe I'll get engaged under 200 again. Those 2 boxes, areas of interest, is because of candles that unfolded in an unnatural fashion. Look left, there's not a lot of volume. So there might be a revisiting of those 2 boxes at some point. If I'm trading, those are my entry points. Meanwhile, there's resistance above. I can short against that resistance. Again, a tactical thing. So the headline is that Apple is bringing AI. Well, that headline was last year. I read that headline last year, and I don't read headlines. I heard of them saying, oh, it'll be somewhere around September of next year. And this headline that just came out is September of this year. So it's the same one. And the fact that they have AI now in their phones. I have AI in my phone, and I don't need a special thing from my phone to be. I just open up WhatsApp, and I've got an AI bubble. I click on it, I have AI. So I don't understand how they're going to monetize it yet. So until I see that, it's not a reason to buy Apple from here. This is just so it says, okay, we don't suck that much. We're still behind the curve, but we're now playing in the headline. Anyway, so it is a phone cycle headline like of always. You used to have people come out and say, oh, there's going to be a super cycle of upgrades. I challenge that. I don't think anybody's going to ditch their phone because they're already using AIs on their phones. Okay, having said that, know what you're chasing. ABBV, it's at a letter R, so it's fighting for is, okay, if you want to take a candle, look at the one from the earnings, the last earnings right there. You can see how it popped violently and failed at 172 to 174. So that's your challenge. Even if it gets to 176, it's not an easy starting point. Okay, so maybe this doesn't happen, but it does have support now. The letter R is trying to become support. So if they drop and hold 162, that would be a good thing. And then go back and make a higher high to 172. So that would be a possible positive outcome on ABBV. So if they dip and they hold this and it's now no longer that and it's this, and then prove to me that you can take this zone out, specifically this guy right there, 172. Happy Father's Day, Lou. Thanks. Airbnb. All right, fell off a cliff and consolidating inside of a pretty wide zone. Let me zoom out. All right, so it is an okay spot consolidation-wise, but I'm a little worried. If they lose this blue box, I bet you they come to the red box. So 125-ish can come into view again. Let's call it 132 to 125 if they lose this blue box. So if they fall below 140, that could open up some selling into the red box down below 133. Earnings coming soon. So be careful. If you're starting longs, make sure you want that. I'm creating a new indicator here. I'm loving it, actually. Whew. Okay, ACN, Accenture. I've had Accenture on my watch list to get long via credit put spread for a while. The P&L looks okay. I mean, nothing fantastic, but it looks okay. And the stock is being punished like it's going out of business. So I don't understand that. The problem is that if it does lose 278, it might come down to the 250, 245 area, which is a pretty solid support zone. So I tell you what, I'm going to put myself an alert down here and one down there, and to definitely go long down there. Now I'm debating. My hesitation is if I go long here and the market has a hiccup. ACN with earnings this week. Oh, ACN earnings this week? Oh, yeah, it is. Thanks, Brad. All right, so since there are earnings this week, I reserve judgment. Come to me the day of the earnings. Maybe we'll look at its options. Maybe we have some clues. Speaking of earnings, Adobe. Sell. Sold to use. So here's a stock that's now coming back into an area from which it collapsed a couple of earnings ago. And people want to get started long here. Pretty solid performance. The company's doing very well. AI, I think, is helping it because now more people can use their stuff by using just simple words, I believe. I wouldn't start longs here. I would strategically start longs on dips because this candle is pretty wonky. Let's say they want to retrace half of it. So that's 500 or 504 or 495. Simple logic. If I waited this long on Adobe, why jump in now? AFRM, what's going on here? A complete party hat. I thought I heard somebody say something about it and Apple. It just doesn't seem to me like Apple likes to partner up with companies like that. But anyway, anyone bought AFRM up here, you need to reach out to me. You're not using your membership with me. Well, like my simple concept is what? Look left before you do anything. If you looked left, you would have seen this guy, this guy, this guy, this guy, this guy, this guy, and this guy, and this guy get clobbered every time they bought the stock up at these levels. And then you decided that this time it was different. Okay. Now down here, I like it. It's closer to a pretty solid support. The business is great. They spend a lot of money, but it's a good business. So if you're getting started now in longs, I get it. So I'm going to add it to my watch list, actually. Nobody brought it to my attention. See, nobody asks about it on the way down. A couple of weeks ago, a lot of people asked about it on the way up, actually, last week. So that we should have that instinct when something is collapsing into support is when we ask questions, not when it's flying to the moon. I have a personal friend who reached out to me yesterday, all depressed because the stocks are low, and we had a conversation about that. Okay, ALB. Whoa, Albemarle. What happened, Albemarle? Avoid. What happened is they're going down to my arrow. When did I draw this arrow? Oh my goodness. Okay, so that's a good call. So I don't track the stock. A lot of you track it, and I've addressed it before. Let's take out this, and let's see if we can zoom out. The problem really started up at losing 170. Once we lost, look, they bounced at 170, bounced again, failed, tried to recover, and never were able to recover. So now 170 was lost, and that is actually, the arrow should be a lot lower. I did it a favor to make the arrow only this big. In theory, the arrow is $160 from the neckline. So not that it's going to happen necessarily, but that would put it down here. Caution, bad quarter, not recent comment, so I'm not sure when that was. Let's see here, quarterly. Okay, so yeah, that's not good quarters. So be careful, fundamentals do play. So when a stock consolidates for months sideways and then it loses the consolidation, so maybe the arrow only stops here that I put in there, but now you create risk from here, new risk that could be $30 to $50. Here's 30, so 79 is doable, and here's 50, 60 is doable. So 80 to 60 is doable from here. I would not catch this falling knife, not like this. Are earnings coming? No. So here's what's going to happen. They're going to try to recover 118. So let me rephrase it. If they don't get back to 118, 120 and hold, they're in danger of coming down to 80 to 60. All right. So if they don't recover this zone, once they lost this, this is probably the target. Be careful. Okay, AMKR. Is this the power people? Like power blocks and such? No, that's the other one is with an ER, I think. Okay, or anchor. All right, so this is a stock that's trying to break out. It's hitting prior fails. Buy the dip if you're one of the ones that think it's going to break out. So when it comes down into support, so anything close to 33 or 31, this is a trading comment, not an investment comment. If you're investing up here, there's nothing I can say that's going to sway you. If you decided to go long up here, you're going long into a prior fail. You're ignoring logic. It's failed a couple of times. It's failing now. Markets have never been higher. So it's just a precarious position to start longs. If I waited this long, why now? Why now? Why do I need to jump in now? If you know something, then go for it. I personally would buy dips. The closer to 25, the better. I'm not waiting for 25, but the closer for it, the better. Amazon, I put a letter R a while back, and they're still trying to get out from it. Great company. Obviously, I ordered some stuff. I should have a couple of boxes. Oh, I see them on my front porch already. I ordered a small PC for travel yesterday, and it's at my front door right now. I'll update you on how good it is or how bad it is. It's like $180, $190. Let's see here. If they're able to take out 189, they can get to 202, 200, 202. No porch pirates in my neighborhood. I did have one package one time stolen, and I have him on camera, but that was a Craigslist type of a deal. He ordered stuff, put him on the front porch. He came and took him and didn't pay. Let's see here. 180 to 185 support zone. Actually, 179 to 185 support zone. Next support zone is 174. If you lose 174, and that's a big if, markets are pretty bullish, then you're in danger of having a series of letdowns down to the 160s and 158s. That's not the forecast, but it is very doable if you lose footing. The rally was too fast. There's not a lot of volume. See that letter V? That's a volume void. Look left. There's a series of there are a few areas that did not consolidate well. So weak hands live there. So we're okay up here, but if we trigger something, so that means that Amazon cannot afford to drop like 6%. It might end up dropping 10 to 12%. The trigger higher is just the highs from last week. You might get enough power to have an all-time high. AAPL, I don't know what that is. I know I discussed it this week in the live room. I don't remember what they did. Mobile marketing platform. Okay. Great trend. I'm not sure what to say about it. I'm trying to find an angle that makes sense. All right, so if you're buying a trend stock, you got it. I'm not a momentum trader. This is a mess. Look left. The volume profile is a mess. I don't trust it until they break 50, personally. So next time it rallies into 80, see how it behaves. Specifically 81. And if it loses 72 before 81, that's your battle. And if they lose 72, that is your potential downside. And if you lose that, then same conversation with these two down here. So be careful with that. Good trend for sure. Haha, Brad. Brad doesn't take a day off. Father's Day, not Father's Day, jokes are always here. That's great. ARM. Yeah, bye. Who's asking for this? I need to go read the comments that came with the stock. What are you asking me here? Honestly, what are you asking me? I don't know what to say. A great company. I went long on dips every time. How much money do you think they're going to make out of AI? And how much money has the stock price priced in? So let's, if we're speaking fundamentals, because it's an insane company, fundamentally speaking, margins like this on the COGS, like the cost of goods, that's because they only sell ideas. But then what the hell is that? Why do they eat the entire margin in operations? As long as they're growing sales, that's fine. And then they hit a wall. All right, so this is 52 times sales. Now, this can normalize, but if you're buying one share right now, you're giving it 52 years worth of sales credits right now in today's stock. You're saying, I'd like to buy your company. Okay, what are you going to pay me for my company? How much do you make a year? 1,000. Okay, I'm going to pay you 50,000. That's 50 years worth of sales in my offer. Not for me. I don't care how good it is. You missed it, friend. Catch it on the flip side. ASML. Let's just, I'm short this company and I'll have a conversation about that. Let's compare price to sales, 15, 1.5. And that's huge. Amazon is 3. Okay, Amazon grows well too. I mean, this is not a growth story. Look at the P&L. It is on the yearly, but the quarterly's flattened out. So maybe, we pulled some sales forward. Anyway, I am short this company, not because it's bad. It's amazing. I sold calls or call spread because I had a discussion with a friend and he's long and we will both make money because of how we trade. We sell things rather than buy things. So I'm selling calls and I'll be fine. I'll make my money. And so will he. Not an obvious enter point. Never been higher. I don't know what to say. People are asking me about these stickers. What are you asking? If you're asking to short, no, don't short them unless you're shorting like me. But if you want to buy puts in the SPY. If these stocks are falling, I can guarantee you the SPY is falling. But vice versa is not the same. These are the strongest gazelles in the herd. Don't chase the strong gazelles. Go after the limping ones like this one. Boeing. I'm I'm long Boeing based on sold puts that are super profitable, and I'm short Boeing based on sold calls that are super profitable, like fourth sets, maybe fifth sets of sold calls. I sold a strangle. I sold puts and I sold calls at different times, and they're both winning. If I were to trade the stock right now, I would go long by selling put spreads into support. If Boeing for some reason loses 160, it's probably going to 140, which would make it even better bargain. Let's check on its fundamentals real quick. 1.5 times sales. I don't know how good of an indicator that is, but it's the lowest it's been in a long time. So that's pretty damn good, don't you think? It's the lowest on screen. So people are spreading the word that it's a crappy company. Doesn't matter. We need their planes, whether crappy or not. They will get the sales. If it's a sales issue, they don't have one. If it's a quality control issue, who cares? They're the only one of two companies that can do what they do. So they will have sales. BABA, this is one of the companies that my friend was crying about, and he went long against my recommendation of avoiding the stock altogether. So what's going on with BABA? Good company on paper. What's going on with BABA is I don't know, and that's my selling point. Avoid these stocks. Chinese stocks have an extra dark hole of information. So when I go along Apple, I have to worry about Apple fundamentals and the stock market in the US. That's it. When I go along with Alibaba, I have to worry about Alibaba issues and US stock market issues and Chinese politics, which I know nothing about. Therefore, I don't trade Chinese stocks. I did short the FXI. So if he had read my notes, he would have known not to go long Alibaba since it's one of the FXI things, right? Large cap Chinese company. So it is falling into support, but I have no idea what its government has planned for it. This drop brings it into an area of support that spans 73 to 69. If you lose 68, I honestly don't know where the stock can go. 50, 40, 30, I don't know. Technically, if you lose 68, it's a giant question mark as to how low they can go. Meanwhile, rallies into that purple line will find resistance. That purple line says RNK. That's an old line that I placed there based on Renko candles, and it stuck out from a long time ago. You want to see something funny? Check this out. When was that? Like last year, I drew these two lines. I don't remember drawing them. Check this out. Look at where they were. That was the fight right there that brought this on. So we know what we're doing with charts. If you've been looking at the homework we've done with this, you should have been warned at the risk of losing 76. That's what produced that. Now rallies, unfortunately, are going to hit this box and fail. I would not add to my longs. If I waited this long, maybe I'll wait another couple of days. I would lighten up on rallies on BABA. Okay, this is Blackstone stuck in the middle. You have a hard seller up there and a hard buyer down here. If Blackstone loses 115, 114, I think it goes to 108, if not lower. That's a big if. That's a lot of buying strength inside this red box. So it has support below, resistance above. If you want to sell an iron condor with me, for me, it'd be okay. Is this Cadence? Wow, these are companies that are old. All right, so Cadence, good trend, rally, good breakout from 302. A huge fail at 317. Not sure what that all is about. Look left. That is a prior fail zone. So this week, the bull's job is to take 318 out. If they do, they might make a new high. Until then, I don't get started long up here. I buy dips into the red line, into 295, 292. 297 to 292 area would be the first support zone. Who is this? Checkpoint Therapeutics. Okay, it's trying to break out. Looks like a pretty aggressive inverse head and shoulders that would get you to 275. So from a trading perspective, stick with that breakout effort. Buy the dip to see if you can get to 240. CLF. Wow, what's going on here? Whew. Okay, all these purple triangles with the white triangle. This is a brand new indicator I just came up with this weekend. I've been working on it for a while, but I finally got my acting gear. Let's get out. Check this out. This battle from back here is still a battle here. So this still works. Resistance zone. If my indicator is right, I would want to be long into the support and stop out if it doesn't work. That's a daily comment. Earnings are coming soon enough, though. So the purple line, the purple arrow is good. The purple arrow with a white line is even better. CLF has been falling off one. Okay, thanks, Brad. I don't know the story. What do they do? Are these copper mining? What is iron ore? I don't know what that is. Steel company? Okay. So if construction is getting halted, this week I think we have construction, new permits or something like that. So maybe that's a forecast to this company. Be careful. I don't know. It's a stretch. I'm stretching. CPA falling into support. I'm not sure they're going to be able to hold this level of 93, 94 support. If not, they do have backup support at 88. So if you're trying to short it, start looking for an exit. They are selling rallies, so you want to get above 100 to avoid 89. As it is, you have buyers below slightly and better buyers below that. So 93 buyers, but if those are losers, then you come down to 88. And there are sellers scattered above. Cisco. So this is the one tech stock that nobody likes. So I normally would say get long for a bounce, and you could get a bounce. So if you're a trader and you're getting long, I get it. I'm okay with that. If you are an investor and you're long already, I would not add. If you're an investor and you're looking to get long, take a half of a position because the rally might end up in a lower low eventually, especially if the market's correct. Hopefully it makes sense. So trading, yes, it might be a pop. It might hit 47. I would exit if it does. It's a trade between here and 47, 48. I don't think they can take out this huge candle for years. That's my honest opinion. DELL, I would catch this falling knife, but I don't trade this company. Why? Because the owner keeps making headlines, like major headlines, like, oh, we're going private. No, we're going to spin this off. We're going to private. We're going to go public again. So it's a big dip. People say, oh, it fell 40% or whatever. Yeah, but it was in the stratosphere. I mean, look at the distance from the moving averages that it went. Good P&L, not that great. Look at the P&L, nowhere near the P&L like it looks for NVIDIA, right? Look at the P&L. What the hell is this? So explain it to me. If you can explain it to me, I'll buy it. I think DELL will go to 96 eventually. That's my opinion. And if that's the case, then put an alert down there. And I'm not going to engage with it up here. I wouldn't short it. I would fade the rallies. If we come up to 147 and I'm long, I would exit if I'm a trader. If I'm an investor and I didn't get out, I wouldn't get out. If I'm an investor, I wouldn't add in DELL. Okay, Disney, losing support, it needs to be above 104. If it's not, it's probably going to be at 94, 95, 94. If they lose this yellow box that I drew, the low is 99. If they lose 99, I think they drift a little bit lower, $3 to $6. This here is a target from them losing 110, that arrow. I don't know if I put it before or after, but anyway. And that letter R stood, and that stands up here as well. So I think it's an easier path lower than higher in Disney. The P&L is fine. Don't listen to rhetoric in the media. The company's fine, regardless of their political bias. Okay, look at the P&L. It doesn't lie. Headlines lie in both directions, but the P&L does not lie. It's legally bound to be accurate. So DraftKings, this was an exit. I put the letter R. That letter R belongs here too. Okay, so R is for resistance. I thought it would do a curl and come back down. It did the curl right here, and it came back down. And this was my target for it. Look at that, right in the middle of the target. So if you went long in my target, you're doing well. If you're going long up here, you're not looking at my chart. This is the area, the neckline from which it fell apart. Normally, a stock, when it bounces back into the neckline being $40, the battle zone, look at that giant Head and Shoulders. So it is possible that DraftKings comes back into my square and maybe a little bit lower. So I'm going to put an alert for myself anywhere near the low, and then at the next low after that. This is homework for like a year down the line, if so, and I will go along on dips. I would not chase it up here. Okay, let's see if I can find specific lines. Okay. I think 40 and a half, I would be out of all my longs if I'm not already. To me, anything above 40 was an exit. Ding, 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 ding. Dexcom. Okay, so it might bounce to 122 and it better hold. Because if you make a lower low than last week, I think it goes to 98 in a series of lower lows and lower highs. You're in danger. Let me show you a visual of what I see. So you need to hold this level. Wow. Oh my gosh. Okay, so if you don't hold this level, you then open yourself up to this kind of dip. Again, hold. And the problem is you have sellers above now and sellers above that. Be careful. If I'm long, I am most definitely not adding. Energy transfer partner needs a bounce, and the bounce needs to exceed 15.8. Because if you don't, then you're in danger of getting down to my white box down there. You do have a headline here. Let's see here. I said headline, I meant neckline. Okay. So the downside of that neckline is about this big. This is Nick's neckline. It's actually lower than this. But let's go with that. And there is support. So I give you that. And there is resistance above. Okay. Now we've got a whole picture with all the lines that you want. This is all you need to manage your Dexcom, or whoever this is, ET. Fastenal, and it's at the bottom of my blue box, which I don't remember doing. So it is falling into support. It is also falling into a level from which it broke out in December. And it does have backup support. So if I'm long and I did not get out, this is not where I would pull the ripcord and get out. It might rally back to 66. And if it does, and that gets me out of trouble and I'm not that in love with the stock, I would exit. Anything above 65 is an exit zone. Okay, that's my assessment. Trading wise, investment wise, that's on you. It's a nice dip into a good base. P&L looks okay. So you determine that part. Okay. There are buyers below. Who is this? Oh, Franco Nevada. You guys haven't asked about this in a while. Okay. So sell the rallies. That's for me. 120 to 122 is a seller zone. I'm long into a base, and I would exit on rallies because there's a chance they could curl back down and come to 108, 107. This P&L is too wonky for my own, for my taste. So some people see a breakout from 130 because they're looking at a cup and handle, which is bullish and will take you up to 145. I think it would take a severe change in its fundamentals for that to happen, or it would take an unbelievable headline. Now, I give you that it is falling into strong support zone. That's why I wouldn't get out here. I would scalp rallies. I think this is a payment processor. So good bounce, and this one could take out 75, and if they do, they get to 84. Anything above 80 is an exit for me, unless you've invested for the long term. In that case, then just stop looking at it. Make sure you have enough to add to it on dips, and I'm not talking dips to 55, I'm talking dips to 42. So I'm going to put an alert for myself down there. I don't know much about it, but I'll be willing to trade it down below. By the way, I'm working on adding white triangles for shorting. The purple triangles I love. The ones with the arrows I definitely love. So anyway, 4 is tradable and investable on dips. And this is the end of video 1. So we'll start.